It definitely matters in terms of your business structure, in terms of ownership, what kinds of entities you own and who owns them, for a few reasons. When it comes to the tax code in general, there is something called a controlled group, and it really goes to the aggregate rule is what it's also called. But it's very important when a taxpayer owns multiple entities that we're accounting for that common ownership in how we're applying the tax code. For example, if you own two different entities at 100%, it's very straightforward that there's that ownership. And the government has written the tax code in a way where they don't want people essentially playing with numbers. They don't want people playing with their income and their gross sales and kind of moving money in one company to then claim something in a different one. Where it gets a little bit more complex is when there are several owners and several companies. And we've dealt with everything from single entity taxpayers to 16 to 20 company taxpayers, and with lots of different owners. There's also the complexity of who those owners are and if they're related to one another. And then the employee retention credit has that special nuance really of who you have on your payroll if you are an owner of a company. And so we ask for a lot of information in terms of who your family members are if they work for you, because we need to know about brothers and sisters and wives and husbands and aunts and uncles and things like that, so that we can make a determination of whether we're allowed by statute to take their payroll towards the credit, because there are limitations on that based on who owns the company and if there are any relatives on payroll.
So those aggregation rules that are very important, obviously very nuanced and specific, and you kind of have to become an expert in, again, other areas of the tax code to be able to apply it to the ERC. But essentially they come into play in several situations. So when you're trying to determine whether the company experienced a partial business suspension due to government order, the size of the company as far as the number of employees when determining is it a large employer for purposes of this credit or a small employer, and then also looking at the gross receipts perspective. And you really have to take into account that entire aggregated group in certain situations to make those threshold, or to answer those threshold questions.
Yeah, it can have a huge impact on qualification. And it's interesting, sometimes people say, well, that company is, it doesn't really do anything, or it's just a real estate entity. But again, the numbers really do interact with one another. And if there is that common ownership, we want to analyze it, because sometimes it can actually increase your credit, especially if there are additional employees on payroll for any of those entities. But we want to make sure we're doing it right at the end of the day. And to really make sure that we're looking into all facets of the tax code and how it's written, we really need to make sure we're applying it correctly to all of your businesses. And so, again, they might not all qualify for the employee retention credit, but in terms of their revenue and different aspects of that, it can have an impact on whether any of the businesses qualify or to what extent.